What's going on, traders? Welcome back to my channel. It's Dr. Ambitious here. If you are watching this video or you are new to my channel, it's your first time watching a video in my channel, you might want to click that subscribe button, because what we talk about is trading, and I try as much as possible to document my journey and my experience in the financial market so that I can teach you and we can all grow together. In this video, what I will be talking about is my trading strategy, how I personally trade supply and demand. Keep in mind, this is just a piece of the puzzle of my strategy. I will be making more videos in the future just to complete the puzzle. So today I'm just going to talk to you guys about the rules of supply and demand in the forex market, and how I personally trade it to be a profitable trader. So let's go to the charts and let me show you. All right, so the pair that I want to look at for this supply and demand lesson is USD CHF, and I'm gonna be showing you how the demand played out and also how the supply zone plays out. But before that, let me just give you guys a quick overview of what demand and supply is. So let's look at a trend. Let's look at a bullish trend, for example. We all know this is an example of what a bullish trend looks like. We're over here, we're seeing higher highs and lower lows happening. Sorry, higher highs and higher lows happening. The top of this is the higher highs and the bottom is the higher lows. So over here we have something called a demand zone. This is a demand zone over here, and my definition of a demand zone is the last bear candle before the market shoots up. That's a demand zone. So over here we will have something called a red candle, and then we will have a series of a blue and red candle, which are bull and bear candles, going up in a bullish direction. So what makes this a demand zone is that, and if you're looking to take a trade from this, you will have to see price come back into this zone, and this right here will be your entry point. So you would literally enter the trade over here and put a stop loss right here, right underneath, and then your take profit will be right here at the previous high of the market. So this is a 2.6 risk to reward. So this is usually how I take my trades, and sometimes the market will not come all the way down to your demand zone. Sometimes the bear candle is so small and market will do a little retrace, but it won't come all the way down. So this space over here, I like to call it an unfulfilled sufficiency area, where market did not return all the way. We've seen this a lot in the market when a trade will miss our entry by 1 or 2 pips and then decides to take off. So if you're able to catch this, there's nothing wrong with actually entering here, as far as you keep your stop loss right under that area and put your take profit at the next point. So this is me showing you guys how I enter my demand zone trades. And demand zone, you can find it anywhere, guys. You can find it on a big time frame, you can find it on a lower time frame. I usually use the word demand and supply in a substitute for support and resistance, because I believe in the law of supply and demand, and I don't focus too much on resistance and support. I use the word demand and supply, and I'll show you how that works for me. So let's say a market is consolidating, something like this. It's easy for you to just say, oh, okay, at the top here we have an area of resistance, and at the bottom here we do have an area of support. So the top here can actually be a supply area, and the bottom here can be a demand area. It doesn't really matter. Whatever you want to call it, you can call it all your other blocks, you can call it all this area is support, and I prefer to call it demand area. And at the top here we have an area of resistance, so you can call this a supply area. And my definition of supply zone is the last bull candle before the market starts trending down. So let me give you guys an example. Okay, let me see if I'm doing this right. Okay, this is it. Yep, I think I got it. So I have my lower lows and my lower highs here, and this over here example. I will show you guys what it looks like on a real candlesticks, but right here we are drawing a rectangle around the last bull candle before the market starts dropping. So this will be my demand zone, and the moment price returns back to it is when I would actually enter the trade. So it's very important to wait for price to return before you enter the trade. So I will short the market somewhere around here, put my stop loss underneath above that, and my take profit over here. So this is a good trade. A 1 to 3 risk to reward, not bad at all. So this is just a little overview of what it's gonna look like, because it might be a bit complicated for you to understand. That's why I'm showing you guys, so it can be easier for you to understand. So let's look at it from here. On the daily time frame, what will I do first? I would mark my area of demand and supply. Some of you might call it support and resistance. So let's mark the areas. Over here, we've seen the market play out here, which is good. We've seen another area here. Okay, let me use a line. So over here we have a blue candle, which is a bullish candle before market dropped. So guess what? It's an area of supply. And over here we have 1 to 3 red candles here before the market actually shoots up. That makes it an area of demand for me. And over here we have the same thing. We have a red candle here before market shoots up. That's another area of demand. You can also call this area of support, and actually it is something I like to call a dynamic level, because price played here as you use this area as a supply and demand. Over here you see a blue candle here before market dropped, so it was a supply over here, and over here it was a demand. And you can also say over here it was an area of resistance, and over here it was an area of support. Now moving forward, let's see how many more lines we can draw. Right here it's also a big one. This is an area of supply. Before market dropped, there was this one last bullish candle we can spot. So let's see, how can we actually take a trade like this? To take a trade like this, it's very important we drop down to a lower time frame and see what's going on in the market. So over here we see the market pushing up. Over here it's forming something called higher high, higher low. It's another high here, higher low, higher high, higher low, higher high, and then finally market structure was broken. So if you're looking to trade this is just an example. I'm really not showing you guys how I would have traded this, but I'm showing you guys how to find supply and demand and how to trade them in a market that actually makes sense. In this point I wouldn't have taken this trade. Why? Because it did not play out at a level of interest, because I would prefer the market to come all the way down here before I enter the trade. But let's just assume this is happening over here right now. So what you would do first is let me take this off. So what you would do first is draw a box over here. This is a lower time frame, guys. I'm not doing this on the larger time frame. Draw a box here, and your goal is to wait for the market to trend up and then return to this area before you enter. So this would be your area of entry. Remember, we have a demand zone here. Market pushed up from an higher high and pushed back into the zone. And then this did not happen all the way. Remember, I call this little space unfulfilled sufficiency. So if you saw that, it's a good time to enter the trade. You can just put your entry point here, your stop loss right underneath, and you can target the previous high, which is over here. And then there's another way you could have entered this trade too. Over here, in case you missed this entry, you can draw another line here, which is an area of demand zone. You can see price pushing up, which we see the last bear candle before the price pushed up, and then price pushed back down into the zone. So that would have been another nice area to enter the trade with your stop loss right over here. and then you're still gonna target this area. So you could have entered this trade 2 times and actually make profit, assuming it met your confluences. So let's see what else is going on. If you are trying to sell the market, let's see a downtrend, and now you can trade supply and demand. Okay, this is a perfect one. So we've seen a downtrend right here happening. We've seen a lower low because the structure has been broken, and then a lower high, lower low, and then the market did not return all the way here. But we can simply use this as the lower high, and then boom, lower low, and then market finally break this structure. So how would you have taken this trade? So right here we see, let me just draw out the supply area. This is a supply area. Market broke the structure and did not return all the way. So this wouldn't have been a trade you take because market did not give you a nice sniper entry. But guess what? There's another zone over here which price literally almost touched it. So this trade I would have taken it because this blue candle was a bull candle before market finally dropped. So I would have taken this trade, and my stop loss would have been right here, and my take profit would have been all the way down here, and I would have profited almost a 5 risk to reward. And that is supply and demand. That's how I usually trade it. I wish I can show you guys more, but I would definitely be doing that going forward. I'll be showing you more videos about the actual trades that I'm taking and why I'm taking them. Actually, I'm in a trade right now, USD CHF, and I will show you guys exactly why I'm in that trade. It's simple supply and demand rule. So so over here, like I've mentioned, there's a demand zone right here. So this is my point of interest, and if I'm ever gonna take profit, I would love to take my profit over here, not all the way up here, somewhere right over here. So this is gonna be a swing trade. Definitely it will take at least a week for this trade to play out. So this is an area of demand as well. You can see the last red candles here before price actually pushed up. So, and it's gonna be a perfect place to take my profit. If I don't have much patience, I can take my profit over here as well. So those are my markups. Now I'm gonna drop to a lower time frame. So what's going on here is price is reacting at my level of demand area, or your level of support, whatever you want to call it. So what I'm gonna do is draw a nice box around this over here, the last bear candle before price finally pushed up. So I would love to use this one, and then price pushed up and broke this previous structure, giving me a confirmation that this trade is gonna be bullish. Now what I would do is wait for price to come all the way down. Guys, you have to be patient. Wait for price to come down to your entry point before you enter the trade. And I'll show you guys a trick. This usually happens sometimes in the market. So over here was going to be my entry point regardless, and my stop loss was going to be right underneath here. If I put my stop loss here, I would have been stopped out. That is why it's very important to make sure you give yourself enough room for your trade to play out. So I usually have at least 20 pips stop loss on my trade. So if I had entered here, my stop loss would have been here 20 pips. So depending on the spread, I might still have been in this trade, but surprisingly I'm still in this trade. Today is Saturday and my trade is still active. I did not get stopped out. So, and my take profit will be all the way up here depending on how market reacts to this level here. So ideal take profit is right here, and I am currently in this trade, as you guys can see. So this is my trade. This is me trading the demand zone, and I will continue to show you guys my future trades, how I'm taking the trades, how the trades are playing out, and how I'm making money in this market. So this is it, guys. Thank you guys for watching. If you haven't subscribed to my channel, make sure you do so, and I will make sure to post more videos that help you to be a profitable trader. I will catch you in my next video. Thank you.